All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals of the Forex market to see what we could take advantage of. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots and lots of notes, especially if you're new, and let's make sure that we participate and engage. If you have questions, it's an open forum. Let's make sure that we either ask those questions in the chat or don't hesitate to take your microphone off of mute to ask your question. The only thing that we ask is if you're not asking a question or making a comment, please do your best to keep your microphone on mute out of respect for everyone else. So with that being said, hey, early engagement is always good. Drop me a 1 in the chat. Let me know that you all are fired up and ready to go for tonight's session, and we can get things started. All right. All right. See all the ones coming in. Appreciate it. All right. So let me exit out of this and go straight to the front page of Trading Economics. But before we do that, Ryan, good evening, sir. How are you?
Good evening, bro. I am doing well, man. Fun day today. Fun day. How are you, man?
Oh, man, I'm doing good. I'm doing good. Price action is always good. Like we say, hey, we just want to see movement, right? And we're definitely getting it as of late.
Yes, sir.
All right. So, hey, big day today, right? We had the FOMC meeting. Fed hikes rates by 25 basis points, which was what was forecasted. So the Fed raised rates by 25 basis points to 4.75% to 5%, as expected, to fight elevated inflation and signal greater uncertainty about the future, about future hikes amid banking crisis. Still during the press conference, right? And you saw the market move, right? When he said that Fed Chair Powell admitted a pause was considered in the days running up to the meeting. But then on the other hand, minutes later, he said that the committee does not see rate cuts this year. And if you go over to investing.com, stock market today, Dow ends down as Fed hikes. As Fed hikes, Powell shoots down rate cut bets, right? So really has an impact on the markets, right? Words matter. Okay, words matter. So he shot it down, right? That they could possibly cut rates. We know there's been a narrative in the market all year long that eventually we're going to pause rates and then cut them. And up until this point, even with the bank crisis, he is still saying, hey, don't bet on it. All right. So the possibility of a pause, right, kind of creeped into the narrative. But cutting rates this year, don't bet on it. All right. So we saw that the Dow and the market overall reacted to that. All right. So elsewhere, pretty much is it, right? As a result, the DXY extended losses. UK inflation, right? That was earlier today. And UK inflation came in above forecast. We talked about that this morning during the early session. Wednesday, right? UK CPI came through at 10.4%. The forecast was 9.9%. That is important, right? As the core came in above forecast as well at 6.2% on a forecast of 5.7. And that's important because tomorrow, right, that plays into the narrative for the Bank of England. Okay, they have a monetary policy summary and official bank rate. They're expected 25 basis points tomorrow, but we shall see. Right, so that was an above forecast CPI, which is saying that, hey, inflation is still running amok. All right, so it's going to be interesting to see what they do tomorrow morning. That's at 8 a.m. And we also have at 4:30 a.m., the Swiss National Bank, they have a policy rate decision and a press conference as well. So that's going to be happening in the wee hours of the morning, expecting 50 basis points. So we shall see. Now, that's the Swiss National Bank. We know what's been going on in the banking sector there, don't we all? And so we'll see what happens tomorrow morning. So it's going to be another great day of volatility tomorrow. And then Friday, we've got a lot of PMI numbers coming out for the Eurozone, French PMI, Germany PMI, okay, UK PMI, and also the US. Okay, and we've got some core retail sales numbers coming out for Canada. So a busy week, right? But we always need the fundamental catalyst to get the market going. That's what we like to see. So any questions on the fundamentals or anything that happened today? Any comments? Ryan, what are your thoughts overall?
Overall, I think ultimately that's what I expected. I thought there still may have been a potential chance for 50, but they did take the bank scenario into consideration, right? It's going to be interesting to see how the rest of the world responds. That's what I'm looking for next, right? The Swiss National Bank, how they respond to the situation. Do they come in as expected? Do they come in below because they're directly impacted by the scenario? It's as expected at this point.
Yeah.
Yeah.
So cool. So let's jump right into the charts, everybody. So we'll start out first by taking a look at the
Benny.
Yeah. Yes, sir.
Just a quick question. Why is it that anytime the Fed or the banks increases interest rates, the stock market falls?
Because you're talking about sentiment, overall sentiment. Because the stock market, right? You look at we've just had an entire era of zero interest rates, right? That wasn't too long ago, right? Where we had zero interest rates. The stock market likes money, right? The cheap money, right? It's been spoiled in a sense over several years now. Okay. When you look at traditionally history, right? When you look at interest rates, typically 4 or 5%. But when everything happened in 2008, 2018, you're looking at an era of zero interest rates. Okay. And we know Japan still has a negative rate. So that leads to a lot of tightening, right? A lot of concern, right? Because you're gonna have raised borrowing costs, right? Money is getting more expensive, right? So now that the money is getting more expensive from the stock market perspective, if you're taking money, you're taking money and throwing it into your borrowing money, throwing it into the stock market for a return, right? Thinking about it, you have to, in order to justify borrowing money, right? Once the rates get to a certain level, you have to justify borrowing money by even greater returns. You understand what I'm saying from an investor perspective?
Yeah.
Right. So now I have to produce greater returns to justify borrowing money at that rate, right? To put it in a market. From a corporation organizational perspective, right? I have to start to tighten my belt a little bit, right? Why? Because if I'm looking at buying money, like I'm looking at borrowing money to expand, and money is becoming expensive to borrow, I might not build that extra facility, right? I might not expand. I might not invest so much in research and development. You see right? We all see, right? The tech layoffs that are happening across the board. And a lot of times you'll see that's the first sector to get hit, oftentimes because tech requires a lot of research and development. A lot of investment has to go into tech, right? So if investment dollars dry up, right, you start to see the job losses. You see companies not expanding, right? Kind of holding, like I say, tightening that financial belt. So a lot of plans that they may have had to expand, right, kind of goes by the wayside. And then at the end of the day, you start to see credit, period, starts to dry up. Okay, so the money to borrow is not as available anymore, right? So you start to get that sentiment shift in the market, and that's when you start to move towards, recession, right? That's when you start to move towards recession, right? And that's just capitalism. The market moves in cycles. It has to eventually reset itself. Okay, so that's why when they raise those rates, you see the stock market go down because of those factors, right? You're raising borrowing costs, right? And that's why he's saying like, hey, when he kept saying all year long, like we're still not seeing the pain yet. We still have a tight labor market, meaning companies are still hiring, right? The labor force is still strong. There's jobs still being created, right? So they're looking at those key data points to see if those lagging effects of rate hikes are starting, to come to the forefront. And so slowly but surely, right, eventually something was going to break. And we saw that the first thing to go were some of these smaller banks that happen to be, like highly leveraged in certain areas that are not as big as your JP Morgans, your Bank of Americas, and things like that. So they failed, right? They got exposed, and they failed, right? And there was very specific situations with these banks that failed, right? And that's what they're trying to do. The Fed, you see Janet Yellen, you see a lot of your major bank CEOs just trying to give reassurance that this is not a contagion, right? These are very specific situations, and they got exposed, right? So interest rates are very, very, very important, because guess what's going to happen, right? When you look at when they set that base rate, that then goes into mortgages, right? So the higher that base rate goes, the higher that mortgage rate is going to go. So now, like you said today, you see the concerns in the housing sector, right? It affects everything. So if interest rates are too high and people aren't in the mood to buy, now you've got less home construction going on, right? So it just makes its way through, right? It's just a huge ripple effect through all sectors, right? And it's very, very impactful. But rate hikes are one of the tools that they use, right, to fight inflation, and they need to slow things down, right? If the market stays red hot and people keep spending, right, then it's hard to put the inflation genie back in the bottle. So that's what's going on, and it's going on globally, right? We saw the ECB hike rates about 50 basis points. Okay, but you have to understand too is that you've gone over 400 plus basis points in a very, very, very short period of time, right? Because globally, everybody's trying to fight inflation. Inflation is a very, 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 very negative thing. And you don't want to let it get out of control. So they're doing what they have to do. Okay.
Can I add something to that, bro?
Yeah.
So the other thing about kind of to add to Benny's point about the money getting expensive, business loans are very variable rates, right? And so when these businesses, when they're making the investments into research and development and new products to launch, as all of these companies did, they're not using the money in their pocket to do that.
Correct.
They're going to go to the bank and borrow that money. So when those interest rates went down to zero, everybody borrowed as much as they possibly could. And during COVID, the government changed one of the laws for the banks, because previous to COVID, they had to have at least 20% of the deposits in reserve. After COVID, banks had the freedom to lend out on 100% of the deposits that they had. So that's also part of the reason that these banks are over leveraged, I've been saying, but everybody went and borrowed as much money as they could, and banks could lend out more money than they ever could before. So now that their interest rates are going up on all of the money that they borrowed, now they have to find a way to pay that money back at that higher interest rate. And the pain that Jay Powell's talking about is ultimately layoffs, because unemployment will increase. Benny breaks this down all the time. Unemployment increases and people will stop spending as much money because they don't have it anymore, because they got laid off from that job that they had, because the company had to cut their costs, i.e. GM, $2 billion by the end of 2023 because they over leveraged themselves. Easiest way for a company to cut their cost is by cutting people. They cut people, unemployment rate increases, people stop spending money. Now there's a lower demand for products and such, and then you have a surplus. So now then the companies will have to decrease their prices so that people can come back and buy. And that's the cycle that Ben is talking about, the up and down in that process.
Yeah, thanks. That makes sense. And the final question. So how does that link to bonds?
So when you talk about bonds in the bond markets, right? So we can go way down in the spiral with this one, but simply think, right? So when you talk about shifting capital in your portfolios, right? So when you're in the stock market, right? The stock market is considered risky, right? But the return is high, right? High risk, high reward. Okay, so when you're looking into, when you're investing in different companies and things like that. Whereas when you look at a bond, right, especially when you look at like a U.S. government bond, right, 2-year, 10-year, or whatnot. So when you look at a U.S. government bond, hey, the return may not be as great, but you're looking at the full faith and credit of the United States government, right, and the largest economy in the world, right? So when it's kind of like when it's time to go for that flight to safety, and I need to reallocate some of my portfolio, hey, I want to put more into securities in times of uncertainty, right? So now when interest rates are hiking, and we saw how for a while, right, we were watching how the rates were just going up and up and up and up and up and up and up because because of the overall interest rate hikes and things like that. And so it's a supply and demand thing. So it's like for a while you're thinking like, well, if I can get a 4% return on a 10-year, bond, U.S. bond, and I'm looking at certain assets in the market that I have my money in, and it's like, I may get the exact same return, but at higher risk, or I might even come out better, then I may shift some of my portfolio over into securities like bonds, right? Into the bond market where, hey, I got a 10-year bond. They're going to give me on my $1 million, I'm going to get 4%, right? I'm going to get 4% per year over the next 10 years. And in year 10, I get my principal back plus the 4%, right? So I'll shift. I'll reallocate some of my portfolio to securities because of the way the rates were going up and the bond yields were going up. Okay, so that's really simple surface level, and then when you look at what happened with some of these banks, right? That was the Silicon Valley Bank that were into bonds and securities and things and such that they had bought into them long term, but what happens is when those yields go up like they did in an accelerated rate, and you can get a greater return. In order for you to take advantage, right? So if Jeremy has bonds and he has it at 2%, and the yield goes up to 4%, if you want to sell out of the bonds that you have, you're pretty much you're gonna pretty much lose money because you're gonna have to sell it, right? There's an equation for it, but that I'll go over on this today. But you're gonna pretty much have to, in order for you to sell your bond at 2% and move out of that, and in order to sell it for another investor, they're not gonna buy it from you at the same price that you bought it for. You're gonna have to decrease it. So, for example, if you bought it at $1,000 at 2%. In order to sell it on the bond market, you might have to sell it at $750 in order for somebody to buy that, and then for you to go and reallocate that money and get another bond at 4%, right? So some of them were just so over leveraged in certain areas that they got smoked, right? When the market made that strong shift that it did, and you got these rate hikes and the bond yields went through the roof like it did, they got destroyed, right? They couldn't hold on. So it's just the ebbs and flows and the reallocation of money depending on what the sentiment is in the current economic conditions, right? So that's just a little bit in regards to bonds. But great questions.
Thank you.
Great
Ben.
question. Yep.
Yeah.
Yeah, for sure. It's fascinating. And you know, that's one thing why we really try to go over fundamentals, because we're so busy in our everyday lives that all the time we might realize that it affects us once the gas price goes up. And then, you know, and then everybody's chirping. But it's really something that affects us every single day. Every single day, right? That's why they're tracking it. Consumer price index, producer price. How much does it cost a producer to, you know, to produce a product? How much are the materials costing? Because a lot of times that's what passed on to the customer, right? Some of these things that are going on with the banks and them swooping in, you know, to save these other banks. A lot of that stuff that's going to get passed on to the customer. It has to get paid for, right? It's going to get passed on to the customer. So that's why all of these data points are very, very important. The Fed has their key data points, sets of data that they like to look at. The market and these different investment firms, the Goldman Sachs of the world, the banks of the world, JP Morgan, Chase's, they have their experts. They're highly educated folks that are running these models and looking at these data sets to try to determine what could happen in the future, right? And what the Fed might do. And the long-term impact, short-term, medium-term, and long-term impacts of these decisions. And that's how it goes. That's right. If you listen to Bloomberg and you listen to some of those sources that we provide for all of you, you know, you're really starting to understand the language and what's going on. And then you get an even better idea when you look at the technical charts, right? And it can really help you and give you an edge in the market. All right, so we have been talking about the euro strength for quite some time, because the sentiment coming out of the ECB for weeks was, hey, we're bullish. The tone was bullish, never went away. And then they came and they hiked by 50 basis points, right? So, and we know that way back over a year ago, they were one of the laggards in the beginning when it came to interest rate hikes because of the war that escalated. You know, so they've been kind of playing catch up. So they've been more aggressive, more hawkish. And when we look at these charts, you'll see, right? So even if we go to investing.com, right? Just so a quick technical summary, if we go to investing.com and you look at the euro, look at the euro across the board, right? Look at euro strength across the board. The Oz, Euro CAD, Euro Swiss, Euro GBP, the Euro Yen, right, is the only one that's neutral, right? Because of some of that yen strength, safe haven, things like that, right? But look at the Euro NZD, the Euro USD as a result, okay? Pretty strong across the board there, right? You got the pound showing some strength. CPI report that came in. When you get a CPI report, an inflation report that comes through above forecast, what's the sentiment become? Right? Interest rate hikes. They still have an inflation problem. What's one of the tools that central banks like to use to help combat inflation? Interest rate hikes, right? So you're starting to get the market kind of pricing in, right? Some of those interest rate hike expectations, right? So it's going to be quite interesting tomorrow to see if they get more aggressive than what's forecasted or not. And then it's already, right? So if this is already being priced in, if the market's already priced that in on the pound, then it becomes about the forward guidance from the here tomorrow, okay? Your monetary policy summary, okay? So that becomes very important because we want to know what are things going to look like moving forward for the pound. What's the Bank of England thinking? Okay, what are they thinking? So that's why you always have the rate, right? And then you have the assessment here, right? They call it different things. Like today, you have the statement, the rate that was released, okay, and then you have the press conference afterwards. Very, very important. Okay, very, very important. All right. Good stuff. All right, so let's go into the chart. So we'll take a look at the great questions, everybody, by the way. All right. we look at this US dollar, right? So we had the crown drawn. I was trying to figure out, is this the turnover point here at 12,987, or will it push higher to meet an equal right tip? Well, it turned over, right? We got our answer today. We were looking for that catalyst, and we can see that here on the daily, we are turning over in the zone, right? For the crown type of formation, okay? So that's what's going on there. The dollar is moving down right now as we move down through the 4, right? When you look at that crown formation and you pull that fib from the high to the low to complete the harmonic pattern, this is what it looks like. So we're moving down, right? Just a little spatial intelligence. That's all it is. That's all, right? So when we come here and we look and we move up to the top there, and we got that pullback and then down like that, okay? So there's our crown, all right? So that's the DXY. So right now, right, we can see the dollar show some weakness today to the downside. Now, what's cool about patterns and price action is that if you come to something like the UJ, as a result, this makes his mind up. Isn't it amazing how things kind of are similar, right, with the UJ? So this is the UJ weekly. You have the same type of similar price action pattern setting up, and you see that UJ moving to the downside, right? So I wasn't sure at first. I had a UJ trade, a small bot that I had on as it picked up, right, that bullish candle, but fundamentals, right, turned it over, right? So that one bumped me out today, but that's cool, right? Knew it was a possibility with the rate statement. But yeah, it's turning over, right? So we may be looking to just continue to the downside. So the 80-20 was big, right? The 80-20 was big to the downside, sell side, through 2 TP levels, right? But now, right, we may continue to turn over. We'll see. We've got that A boundary coming up here shortly. If it takes out that A, then we're looking for a further move to the downside on the UJ, right? We've seen some bank forecasts, some bank executives on Bloomberg are calling 120 for the UJ, looking for dollar weakness, right, and some UJ strength. I mean, there's some yen strength in the market. So 120, that's a ways, right? That's here, okay? Down around this level. All right, so we'll see if that plays out. So I'll leave that there, right? Which is, you can see it. So even down on your 4, once you see it, you can't not see it, right? Oops. So I was thinking today, hey, maybe it wants to push a little higher and get me to, right, an equal left tip. So if that would have made an ABCD wave up, that D extension is right at that left tip, right? So I'll put in a small order for that, but doesn't look like it's going to happen right now. Looks like it may continue down, which is fine, right? Which is fine. So that's where we are, right, on the UJ. So you can see similar price action. I think that's pretty fascinating. As a matter of fact, yeah, I'm just gonna leave it right there. So we'll see how that plays out, okay? So that's the UJ moving to the downside. You can already see on the 1 that 1 hour fib, right, on that short move to the upside is already gone, right? So this is a downside move now, straight up. So here, okay, it's definitely looking like it's not going to try to give one more drive to the upside before turnover. So we are going to, just like that, boom, to the downside. We've got a D extension right there at 129.75 support. We don't have a 382 yet, so we'll see how that plays out. But when you look at, even on this 1 hour, take this out. That's your 1 hour fib. That's been moving to the downside for a while. This is a sub fib. But if you just do this here, this is eventually all going to take you to the same place. So here was that move and that pullback. And then here was, okay. Right, to the downside, like so. And we're moving down, right? So just focusing on that one leg that's driving inner to outer trend line break. Okay, almost got a 382 on that, and now we're moving down. So we may get that D extension here. All right, then the game begins again. So that's the UJ, right? Tracking it from the top down. All right, so let's go. So I just want to show you guys that with the DXY. I want to look at a few pairs. Ryan, I missed this pullback again on this Aussie Swiss. I don't know if anybody was able to catch that.
Man,
that
I was
move.
looking at it. I was looking at it, went into a meeting, bro. And I missed it too.
Yep, I missed it. So overall, we can see that this move on the Aussie Swissy is bearish. Okay, this move is bearish. So based on our daily chart, I projected the extension is 58.77. Okay, eventually for the D extension on that. Why? Because we got a pullback to a 61.8 projected extension of 1.618. Okay, so over time, we're looking for that to move. Now, here, when we just look at a good structure play here, right? You saw price pull back into this zone and it held and then it just collapsed, right? To the downside. So when you look at this 1 hour, okay, right, this was the pullback. So we missed that initial move out of the zone. And then we had a pullback here today, just about to a 61.8. I had it marked up and everything, and I still missed it. So if this move is going to continue down, right, it's giving us another pullback here, but I may just let this one run. I don't know. We'll see. Maybe it moves back up to retest, because then it'll put it right back in the same position. But right now, this is the projected move on this 1 hour. So we want to see, right, price. Right, if it wants to pull back to retest, that's fine. But we want to see price make its way down, just like that. Yeah, I know it's been happening to me a lot. So what I need to get back into, because of, getting so busy, a lot of presentations and stuff like that, meetings, like Ryan said, is to get back into, because I had the setup, but I should have just put a sell limit order in, and to see if price will catch it, and if it would have got activated, stop above the A, and then let it do its thing. So because the setup was already marked up, we were anticipating it, and I should have just used the sell limit. But I didn't, and then moved down. We're getting a slight pullback on it now. So that's the Aussie Swiss. I want to take a look at this Aussie CAD setup, because it is moving long, right? So we know that the CAD has been showing some weakness, and it is moving long right now. What I want us to watch out for, just from a technical perspective, is that you may have eventually, right? So this is the daily chart. You may eventually have a head and shoulders, right? We won't know till it happens. But when you just look at a potential level, if we're moving buy side right now, and you take a look at a potential level that price may move into, right? Then we talk about this resistance level at 93.11 potentially, right? Like so, okay, to give you that right shoulder. So right now, when you progress through the time frames, you can see that this is retracing to the upside, and here's that 93.11 coming in right here at this 93.07. Okay, both of these are commodity currencies. Just right now, the CAD is the weaker one in the bunch, right? So there's that left shoulder Here's that right shoulder still coming in within the AB boundary. So we're moving buy side right now on this. So if you go down to the 1 and you track that retracement with the fibs to the upside, you can see that we're in the middle of the ABCD. So you just bring it all together through the time frames. Okay, all together through the time frames. So you can see we got a decent pullback here. Okay, what is that? Just shy of 86, call it 786. So our D extension would be here on this fib. So it's getting close, right, to that target. It got close. It wicked out doing the price action today with everything that was going on with the Fed. So it pushed up, moved back down, and now it's trying to recover to the upside, right? So we're moving bullish. There's that 93.11 target. So once it moves into that level, we'll see fundamentally what's going on and what the sentiment is when it gets to that level. So that's just a decent upside target at 93.11, not too far from this 1 hour D extension that's already in place. Any questions on the Aussie CAD?
No.
All right. All right. Right. And make sure, right, while we're on here, right, we're locked in and we're focused because we want to make sure that we get those visual reps so you can start to see, right, these price action patterns. And we can see here on the Aussie NZD, right, top down, look at that rejection at 110, and we've been moving down, right? We got a bit of corrective action going on now, but for the most part, this one has been moving right on schedule. And we go through all of these, right? Now, you might not trade them all, but because you don't have to, but the repetition is good because you want to start to play that game, right, through all the pairs to say, hey, I know most people, besides risk management and psychology, when it comes to the technical side, a lot of people struggle because of what? They can't get the direction right, right? So even if you're not trading some of these, you want to mark them up because you want to start to journal and go back and take your notes to say, well, if I had traded that, did I get the direction right? What's my overall direction right? And here you can see this punch right into a 61.8 zone, right in line with 110 resistance, weekly resistance, and we turned off, right? And then what do I look for at these levels, right? Do I look for consolidation at these levels? Do I look for these fib levels to come in confluence with a key resistance level, especially a higher time frame, weekly level like this is here in blue? And then what's my entry going to be? Am I going to use sell limits? Am I going to use additional confirmation? Like, hey, I want to see a trend line break. Okay, I need a trend line break at that point with a good bearish candlestick confirmation, like this here. That's a strong bearish candlestick there, and then you can see we move down after that to the downside, right? 200 over 200 pips, and not even anywhere close to a D, but that's already 200 pips already. What, right? What am I going to look for? Am I going to let it come into this daily level here and then go down to the lower time frame for entry? Okay, like this. Am I then gonna, once I come into, hey, I got a 61.8 on the daily, that's one of my sweet spots. Am I then gonna come down to the lower time frame and try to wait for a trend line break? A trend line break on my lower time frame and wait for a pullback using my fibs, right? Like so. Am I gonna do that and wait for a trend line break on a lower time frame? Or maybe I'm a pullback trader, so I need to see a pullback to my fib levels that I like. So maybe this break here, I would have missed this move because it didn't pull back deep enough for me, retest the backside of the trend line. But this one here, right? I was in the game. I got daily resistance, this red line here at 108, right? 108.91. It pulled back and it came into my sweet spot zone. So now I'm looking to get into this position now, right? At this level, put my stop above the A. I want to get short here. 61.8 zone, right around that area. Okay, get short. Here's my ABCD move, right? So this position here, if I'm a pullback trader, there's my stop, 78 pips, my D extension, 180, right? Or is this just my entry, how I gain my initial entry, but my ultimate target is my daily 1.618, like so, at 98,268. And once I get that initial entry, I'm gonna position trade this bad boy all the way down to this daily 1.618 extension. And every time I get a pullback opportunity on my lower time frame, I'm just gonna scale into the trade. I'm gonna add another position. So here, like this, here is my daily 1.618 D extension target. Daily 1.618 D extension, right? This is why going from the top down is so powerful. So that's my long-term target. So maybe I say, you know what, in my trade plan, once I get a daily level, right, fib level, 61.8, I go down to my lower time frame, my 4 hour, my 1 hour, I look for a trend line break to get in, right? A pullback like in this example. Now I've got my initial order in right here. This is my initial order. Now, because what my take profit though on this swing is here, 98,268. So guess what? I'm gonna trade small. I just dropped me in 20, 30 cents, depending on the size of your account. But every time this trade gives me a new fib and it pulls back into a zone, guess what I'm gonna do? I'm gonna add a position, right? And then this one is gonna run like so. Okay. Let me move this over. So now this position is going to run to this extension. But you know what? I'm not looking to get out, right? Maybe I take some profit off the table. It all comes down to your trade plan. But look, I got two positions in now. When this price moves to the D, guess what's going to happen? I'm going to get a new fib like this, okay? Now, however this price action wants to move, but whenever I get that pull back into my sweet spot, guess what I'm going to do? I'm going to add another position, okay? So, hey, I can only afford to trade at 3 micros. Well, you're 30, 60, 90 cents in. Now, you're not even at $1, right? But you know what? We got a ways to go. Okay. Boom. Now, guess what? This new fib comes in, and I want to add a trade again. But this time, it gives me a 236, and it takes off on me. Somebody tell me, do I take and add a position here at this level? Yes or no?
No.
No, right? And really, it depends on your trade plan. But if my trade plan calls for a 61.8, you're exactly right. No, but guess what? I'm still in the trade. And you know what I'm doing as a result too? I am going to move my stops down every time. Because now guess what I'm doing? I'm locking in profit. So if this trade decides to go berserk and the bottom falls out of the market or something crazy happens, you know what? If price wants to reverse and take off and I'm not around, boom, I got stopped out, but all of this bag is mine, okay? Because I've managed my trade at this point. And so now, you know what? I'm gonna take it all the way down to this daily 1.618. So guess what happens? Now, okay, that's 1,000. That's 960. And that's 820, right? Because my long-term directional bias was down, right? So that's why we do top-down analysis, right? Because you can get into swings, right? And the market, right? When you look at the fundamentals and the market supports a move, down, right? So this is where this trade can end up. Does it happen like it all the time? Nope. But that's why we use risk management and we manage our stops. Maybe, hey, I'm halfway through this trade. I want to take some money off the table. So I go into my MT4 and I close out 30, 40, 50% of my position, let the rest run. If it pulls back, maybe I'll add back to the position again, right? So many different things you can do when you're swing trading, okay? When you're swing trading. So I just wanted to make sure that we covered that. So I know we got some new folks, right, that may not be too familiar yet. And you know what? That's all right, right? Because at one point in time, it was like drinking water out of a fire hose for each and every one of us on this call, to include myself and Ryan, all right? But you will get it. Like Ryan always says, give yourself some grace, give yourself some time. Your journey is your journey. Don't compare yourself to nobody else, right? That's my Ryan spiel. Did I do good on that, Ryan? Oh.
Man, you hit it perfectly, bro.
So, but yeah, so that's how these longer term positions could work out for you. But they do require a lot of patience, right? You will find yourself trading less, but oftentimes you'll find yourself making more money. And you'll keep your hair on your head. Okay. So that's the Aussie NZD. Any questions on that?
Oh,
All right. Appreciate you. I want to take a look at this this Aussie dollar. Okay. And right. So this is your overall view here. Okay. Has been moving down, right? But we're starting to find some support here on this weekly. Okay. I just think that the dollar's correcting. We saw the DXY AMA get taken out. But we know that the dollar plays both sides as the world's reserve currency, that if we end up and that sentiment starts to sour and that credit situation starts to tighten, I can't help but say, hey, capital flows into the dollar because the dollar is a safe haven asset as well. It can act as a safe haven. So long term, short term, the dollar may be down for now, but over the medium to long term, I don't bet on the dollar staying bearish, but we'll see. Like we said, we've got some folks calling 120 on the dollar, but I don't know. We'll see. It's kind of up in there. But this is the 4 hour, right? So we know we've been moving down, and based on this 4 hour high, we're running this bid from the top down. We're looking at a down retracement zone. So we're looking for this to at least move back to the upside. And the reason why I said all that before is because if the dollar's moving down, we may see, right, this continue to move up at least to our 382 target. Okay, at least to our 382 target. All right. So that right now is, if we're counter trend trading that, it is about 125 pips away. Right. So we're getting a reaction. It's just slow and choppy, which I understand. Right. Because if you're in a potential risk off scenario, if you got uncertainty, your Aussie tends not to do so well. But you also have a dollar right now, right, that we saw turned over. So you're getting it real choppy. A lot of times you get choppy price action when you have two currencies that are operating in a weaker fashion, and then when you have two currencies against each other that are super strong, right? So you see this choppy, slow grinding price action, and we'll see if we eventually get price to reach that 382 target on the 4 hour. But even if we were looking to short the Aussie dollar, we need a high price anyway, right, to get short for the C to D move. Okay. And if the Aussie is actually going to move long against the dollar for some time, we're already heading in that direction anyway. So it could be a win-win situation. but that's where we are. And this is right now, this is on the 1, right? Zooming in on it, everybody. If this wants to continue to move up, right? This is the pullback that happened during all of the Fed speak today, right? So that's a possible shorter term setup right there. And then ultimately, this 382 target should be right around the same zone, right? See? So if it's ultimately going to move to that 382 off that 4, we need this to go on, okay? So that's the Aussie dollar. Any questions on that?
Nope.
No.
All right, cool. So let's check in before we wrap things up. Let's look at, we posted the Euro GBP setup. Euro GBP can be crazy, but sometimes it plays in our favor. So we posted this one this morning, and right now we're getting some good price action to the upside. So we'll see if we can close that out at that D extension. Be careful, right? You may want to, right? That's not going to be too, what is that, 10 pips? All right, we got a 4-hour level right there that we want to watch out for right here. So be cautious of that. If you're in that trade from this morning, right, it's making that move to the upside. We got a D extension at 88.99, but you got a 4-hour level right there too. So something to think about in case you get a reaction back to the downside. But that one is progressing pretty good. I think the other one in the euro that we had going, not going to get to all the euros as we're coming up on the 10 o'clock hour. But at Euro NZD setup, it's in some key levels, right? But it's moving pretty good for us, that Euro NZD. So we'll continue to watch that one as we move to close out the week. So that price action is still moving in our favor. That's a daily level of 174. We're starting to struggle a little bit there, right? So I'll just continue to keep that in mind. But ultimately, that D extension is right up around that zone there. Any questions on the Euro NZD?
Nope.
No.
All right. Okay. And then the last one I'll take a look at is this Euro USD, a dollar pair. And Ryan, I could not catch a bid on this. I looked at it, and then I'm thinking, well, I'm going to at least get a pullback, right? Because we've been watching this from the daily for the longest, right? So let's look at the daily time.
You know, Mally broke it down this morning. Mally, he's been playing this long. Yeah, he broke it down.
Yeah, good. Well, at least
I didn't catch the bid on either.
At least somebody got it. At least somebody got it, right? Because we pretty much triple bottomed at this daily level to 61.8, right? And it's like you take your eyes off stuff for a day or so, and it's like good night. So shout out to Mally. Shout out to Mally because this is running, right? As long as it doesn't take out the A, it has no choice but to go your way. So I was waiting it down, like, well, if it pulls, I was like, I'm not gonna take it now, right? Either we got a bullish candle and we took out the high. I'm like, that's gonna give me a check back, and then maybe I'll put a small position. But nope, gone. So at some point, right, we'll get a check back. We just came into a D extension here, right? So great job to Mally and everybody else, right? That maybe got it. Jeremy got it too. That's what I'm talking about.
Yeah.
So congrats to everybody. Drop Mally and Jeremy some 7s in the chat. Great work, everybody, on that. Glad to see somebody's winning on that because that was a huge move, right? And I didn't know what to think about it. I think that's where my hesitation was. I should have just played the technical level, put in a small position. But I'm like, well, we got FOMC, no telling which way that's gonna go. But Technical one out on that. It's beautiful. So we're into a D extension. So I'm gonna have to wait for the next correction on that. Be patient. So great work, everybody. Great work. A lot of us I see is starting to turn the corner, really starting to get it. So that's all I have. Ryan, anything before we wrap things up, sir?
No, man, great session. Great session. Keep putting in the work, good people, right? Starting to gain some traction, a lot of you, right? And now it's just about continuing to make the progress. Those that are still going through the training, continue to go through the training, continue to post your homework, continue to get the feedback, continue to ask the questions, right? All of those things are going to help you to compress those time frames and start to take those steps in the direction that you desire. So great session, bro.
Appreciate it. Appreciate it. Everybody. See everybody 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Ryan Carthage. Have an amazing night, everybody. Thanks for being here. Bye for now.